But I'm a living example of that. We think there's immense opportunity and nobody's looking at that opportunity. Nobody's enabling entrepreneurs, their youth, their past 3-4 years. The portfolio companies have impacted directly and indirectly about 4.5 million jobs across the continent.
Today joining me on the couch, Elias is the Managing Director and Head of Financial Services and Fintech. Are you seeing a seismic shift happening in the private equity scene that I'm not?
Okay, you were talking earlier about African money going to Africa. There's a lot of funds. There's a lot of family offices, but they tend to gravitate between your 50 to 150 million. Some will go to 200. Those there's loads of, right? But when you have a fund of that size, the approach, the number of deployment, the scale, the reach that you have is going to be very different to what a Helios will do with billions under management. Can we help deploy US dollars into those markets that will help foster that view? We'll look at companies and entrepreneurs that have African DNA for Africa, right? We tend to not back, because they have access to other pools of capital. Entrepreneurs are not of the same descent, not because of any discrimination,
That's part of your
African, but it's part of
yeah.
the philosophy itself.
Welcome to today's episode of Couchonomics with Arjun. Today joining me on the couch is actually an old and a dear friend. I think I've known Elias for well over a decade. He'll correct me, I'm getting old, so my memory doesn't serve me well. Elias is the Managing Director and Head of Financial Services and Fintech at Helios Investment Partners. Helios is a large private equity player focused on the Africa scene, as I like to call it. But with that, let me welcome Elias. I was going to say Helios. Welcome Elias on the couch.
Thank you very much, Arjun.
Well,
a pleasure to be here.
And I hope I have to ask you the question. Well,
Please
I don't
do.
have to hope. I hope you're comfortable on the couch.
The couch is very, very comfortable.
Okay. Elias, thank you for making time. I know you're based in the UK and you were down here for work. So, we've smuggled you into the studio for an hour. We'll try to keep this for 45 minutes. Just for the sake of the audience, I think it'd be very, very helpful if you could sort of give a brief overview on Helios from the time it got founded, I think back in 2004. And as you're answering that question, what would be incredibly interesting to know is specifically what's kind of the investment philosophy of you guys as a private equity player? And if I could just sneak in from a fintech perspective.
I think that makes perfect sense. So happy to do that. First of all, we're celebrating our 20th year of existence, which in the world of private equity, especially emerging market private equity, is a pretty big milestone that we're very proud of. Over the past 20 years, Helios has invested about $3.5 billion deployed capital across the continent, which makes it not only a pretty large private equity, but the leading private equity and the most successful private equity in Africa. Even to this date, I think we have the largest fund that was ever raised for Africa-specific view. The reason I think we've been that successful is it goes back to not only the investment philosophy, but the philosophy with which Helios has been created. Our two co-founders, Tope Lawani and Babatunde, were both from Nigerian origins, Nigerian descent, extremely accomplished professionals, and saw a need to give back to the continent in the way that they knew how to do. They're ex-TPG, ex-M&A investors. So, can we raise capital? Can we deploy capital across the continent? We think there's immense opportunity and nobody's looking at that opportunity. Nobody's enabling entrepreneurs, their youth, and the economy from that perspective. And this is how Helios got instigated or created about 20 years ago. And that philosophy of investment has carried through over the course of over the 20 years. I think in 2023, over the past 3-4 years, our portfolio companies have impacted directly and indirectly about 4.5 million jobs across the continent, generating billions of dollars of revenue. We've IPO'd a couple of businesses, one of which I think you'll be very familiar with, Fowry in Egypt, of which we're still a shareholder. We're also investors in large fintech that are quite successful. I see one of the logos right there in the corner. Tunes is one of our investment in the latest fund as well, because of the Africa Nexus view. I'm speaking about those because you asked me about fintech specifically.
No, I do.
What we do.
But just as a question, so how large is the portfolio in terms of how many companies have you guys invested over the last 20 years?
That's a great question. I think upwards of 40 companies. We do about a dozen company per fund, give or take, so that it remains manageable, some different size. I think about a third of our deployment is fintech and financial services.
Oh, wow.
That gives you an idea of how bustling the scene is across the continent.
So I think, Elias, I'm an old dog. The Africa potential has been talked about for a long time, right? I've been in the region nearly 15 years, if not, I'm on my 15th year. And, I arrived here and Africa was being talked about at that time. And I think sometimes it's a little bit misleading to club all of Africa into one. It's, I think, 52 or 62 countries. I forget the exact number. So it's a little bit unfair to sort of club all of it. Having said that, there is always a sense that Africa hasn't still sort of stepped up to its potential, right? It's around the corner, and that around the corner stays on. And maybe that's just a feeling, because I'll have to excuse myself. My knowledge of Africa is fairly restricted. I've done some work in Egypt. I've done a little bit of work in Nigeria, and that's pretty much the sum total of it. Last year, actually, I was in Rwanda for the Inclusive FinTech Forum, which was an eye-opening experience for me, because I met, 100 startups. Now, some of them were early stage, and they're not the kind of firms that, you talk to, well, currently, but some of them will grow up and will potentially become targets for you. In your words, describe, the wider sort of tech startup or startup entrepreneurship scene that you guys are seeing in Africa, and where do you see sort of pockets of interest and interesting developments and growth?
So we do speak to all the startups as well, because we do have a VC fund.
You do, actually.
Just so you know. So for earlier stage, recognizing exactly what you said is that there's a lot of opportunities, a lot of businesses that are immature or still at the infancies of development that we can help grow and bring to the next stage. But to your question, I think I would agree with you. I think that it's at the cusp, it's there, it's coming, is a true feeling and a true reality. But that's also because you're talking about a very diverse range of markets. So the answer is very nuanced country by country. If you look at countries like Kenya, I would say that potential is much more mature itself. So even from a financial inclusion or rate of digitization, the contribution to GDP growth, the opportunity, the fact that Kenya itself has become a mini Silicon Valley of tech enablement is something that is quite developed already. And that's why the US delegation, I think last year, came in and make a bit push on that. You look at other economies, Nigeria included, I think there's a lot of innovation going. There's a lot of movement, but those are huge markets. And the scalability of those businesses is still yet to be determined and viewed. So from us and our investment philosophy, so we look at what are the businesses that will help enable the digitization of the infrastructure of the continent or of each individual countries themselves, whether it's across large economies where we'll focus on players that can win and become dominant players in that market, or players that can then have a Pan-African strategy overall. Short of that, I think the macro landscape is always your enemy. Time seems to always be a bit of the enemy because of that macro landscape in Africa. So unlocking that potential becomes quite tricky. I would say, if I can add, the last thing is on the growth, the focus of private equity, of Helios Investment Partners on their investment. The value creation angle is a key differentiator for us versus other more Western private equity, because we just have to do it. We have to ensure that every year we increase the value of our companies, we help them move on to the next stage, and that hand-holding is the differentiating factor and why we think there's a lot of potential.
Okay, so let's talk about fintech for a little bit, right? So in the context of, let's take the fintech conversation. Sure. You've got a diverse landscape. Yes. You've got a landscape which is at a different level of maturity. Yes. A number of these countries are incredibly hard to work in for all sorts of reasons. Half of them I do not want to name, right? So from a fintech perspective, I guess a threefold question. One is, how do you see the evolution? And again, you can pick and choose a couple of countries to kind of paint a more sort of deeper picture. Secondly, how do you see that impact how you guys are investing? So are there any particular sectors or particular countries that you're more focused on? And third perspective is from a value creation perspective, how much of this pan-Africa, right, or multi-country strategy really does play out in a country, in a continent like Africa, which actually has incredible diversity once you get on the ground? Sorry, it's a very mouthful, threefold question. I'll remind you if you forget one of those.
Please do remind me. I was going to say I should have taken notes. And also, you say you don't know the African continent, but from the questions, it's.
No, I just prepared them.
You're putting the right word. So maybe I'll answer in reverse order,
sure.
Order, if you don't mind. I think the Pan-African play, it's a very good question, and one we ourselves ponder quite a lot. From a fintech perspective, I'm going to answer fintech and financial services. I'm not a very bullish believer on a strong Pan-African play, with the exception of a very specific set of use cases. And I'll give you what those use cases are in my mind. Everything that is remittances, cross-border trade facilitation, intra-Africa or extra-Africa, there is an opportunity for Pan-African play. I think the minute you start going into traditional banking, digital banking, some of those other use cases, you really struggle because of the fragmentation of the regulatory landscape. You start having to apply for multiple licenses. You start having to apply with different core banking setups and localization of data and infrastructure and data sharing and conversation, which makes it incredibly difficult to have a unified view. Now, it doesn't mean there's no players like this. It's just that the amount of effort required to get that. There are blocks in Africa, Western Africa, Francophone Africa allows you a bit more of that unification, but a proper Pan-African view. There's a company called OnAfrique, used to be called MFS Africa, that took on that challenge. I'm sure you've heard of Flutterwave and some others. You know, again, they're doing great forays. I think the challenges that they're facing, or the niche market that they're playing with, which is large enough in its quantum, is that movement of money, remittance, connecting a network itself. The rest of the ecosystem, I think, has a long way to grow to become a true viable Pan-African player. You'll find players that have offices and presence, and they say we cover the continent. Yes, it's a country by country. From an investment philosophy for us, which I think was your second question, we look at, obviously we can't miss the big countries, right? Nigeria, Egypt, South Africa, Kenya, Ghana, typically are Morocco, are typically get the larger focus of our proactive search and proactive engagement, because they have enough depth in themselves. There's enough access to talent. There's enough infrastructure. And I think digital enablement is at a place where, you know, the cost of acquisition of customer, thanks to digitization of the infrastructure, becomes palatable for a lot of those services to scale and move and become longer-term viable. So we focus a lot of our efforts on there. Having said that, we've invested and deployed capital across 35 of the 52 odd countries over the past 20 years. So we are very familiar with the diversity. And again, I'm talking from a fintech financial services space.
And my third question was sectorial.
Yes, and sectorial, I think it has evolved. So I think what we started with is a pure exploration play around infrastructure enablement. So we are an early investor in InterSwitch in Nigeria. We have invested into Bayport, which is a payday lending player, Sub-Saharan Africa and South Africa. We've put money into a company called TPay in Egypt, again, a payments company that enables micro-payment across the continent. So anything that helped drive connectivity, right? Movement of money. We've evolved that philosophy, and I've now looking at 4 key areas of focus as we deploy capital. One is still very much that, but the approach is different. What are the players that are driving efficiency in that movement of money? Real-time payment platforms, real-time settlement, open banking, leveraging open banking as a means. Blockchain technology enablement for remittances is something, again, regulation aside and the difficulties it poses, are areas that we think are going to take over. There is the Africa Free Trade Agreement that has been signed by most countries across Africa. And there's, as a resultant of that, the payment infrastructure, the Pan-African payment and settlement system that is being put in place, which is a design to build the rails for intra-Africa trade on payment of use. So that remains a big philosophy of ours. Cap Payment is another business we IPO'd last year at $1 billion valuation on the London Stock Exchange, and their philosophy is all that remittance. The second big piece that we look at is everything around digital banking, but I would say digital banking with a bit of a twist, meaning how does digital banking enable the SME ecosystem.
Fair enough.
Right. So
Which
we
is-
would not look too closely at B2C players, at least not proactively, just because of the challenges on things like eKYC, on scaling, cost of acquisition, still cost of acquisition and choice that customers have to switch on there. I'm looking forward to one of those really disrupting and winning. We have our eyes, wide open for a couple of it. The third one is the banking as a service infrastructure player, B2B.
We
B2B
can
players.
never end a conversation these days without banking as a service mentioned on fintech.
You cannot. Embedded finance is the way.
I was going to say that. Well, there you go.
There
The second big
embedded
word
finance
is
is the way it goes. It's very, very immature. There's very few homegrown scaled entities across the continent that have succeeded in that view. There's still a belief of some of the incumbents that they can build it themselves, or that, I will talk to the big guys, the Temenos, etc. But I think that disruption is coming, and I think we want to be at the forefront when it arrives. The last piece is, I can't not mention it, but crypto and blockchain.
Yep.
Again, I'm saying
I
the
think
last
digital assets is a huge opportunity in your part of the world. But please let me not interrupt you.
No. Yeah. I was going to say it's probably the one that's the least mature from our perspective, and probably more my colleagues on the VC side that look at some of those.
I was going to ask you: are you actually seeing enough digital assets play come up from the organic market, or are these international players who are wanting to get into Africa?
So it's a mixture of both. Right. I think there's a lot going on the continent, a lot of great tech, a lot of great digital asset players, but they're not able to scale because the regulator struggles to understand the use case and struggle to understand how to control that ecosystem. So they haven't been able to succeed. Now, I'm sure you've read the Binance Nigeria fine that is being held. There's still a perception of what is this? How do we do it? How do we control it? How do we regulate it? Which I guess is globally the case, but very much as to there. There's a bunch of businesses, Latin American businesses expanding in Africa, European business expanding in Africa, Middle Eastern business expanding in Africa, and we've actually, I can't reveal the name unfortunately, but we invested in one of those on the VC side to do that.
And I agree. So my 2 cents worth on the whole sort of, if I may say, digital asset scene, in the wider context. I think blockchain as a technology should be used. There should be nothing against it. I think it has certain efficiencies and effectiveness that should be used. I think there is a whole gambit of play around tokenization,
yes,
and especially tokenization of real world assets or even financial assets, which I think give a huge opportunity. I think there are some legal challenges in terms of ownerships and rights and so on and so forth. I don't understand them fully, but as I read, I understand more. And then you sort of get into the world of, if I call crypto as we understand it, right, which is around, the Bitcoins or the altcoins and stuff. And then there's CBDCs, and obviously Nigeria has taken quite a progressive view on this. I personally think, my humble opinion is we should not club all of these together, because I think the first two should be running because they're technology-led solutions and they create efficiency. I think the third segment needs a little bit more understanding, and I think there are certain I guess global countries which will take the path, and Africa will either follow, right? And I think CBDCs, nearly every single central bank today across the world is experimenting either at a wholesale or retail level, right? And so on and so forth. Let me pose the question. So I should have asked this question in the in the reverse order, but let me ask you this question. Maybe the answer is there isn't any difference. When we guys look at the context of the disruption in the whole world of financial services or future of finance, right? We typically pick up trends like changing consumer behavior. We talk about emerging technologies. We've mentioned blockchain. There are a number of others which have come in. We talk about the fact that there is this new breed of competition which has come in, which is both informing the consumers and customers, but also at the same time addressing some of the gaps that the incumbents have themselves. Then there is this opportunity in terms of incumbents wanting to get more digital and therefore so they're working. Are there any Africa-specific trends? And obviously I should mention the surplus amount of investments which came into the fintech sector over the last 7 years, if you don't count the last 2, where actually the whole sector took a beating, right? Are there any unique trends which are Africa specific that are shaping the future of Africa from a fintech perspective?
I don't know if unique is the right word. I think the brush you painted is wide enough that it's very hard to say those trends will not
like
apply
a good consultant, like a good consultant, right?
Will not apply to the African context. I can't say this is not true. I think it's all about the nuance and dependency of
and I guess the order of priorities.
And the order of priority and the maturity. I think one thing that is probably more prominent across the continent, in specific markets even more so across the continent, is the role of digital disruption in the creation of new business models. And by that, I mean two things. I mean that the leapfrogging of products and innovation that backs up products and innovation is staggering, right? When we were still talking about ACH and digitization of cash in the US till very recently, this is something that people in Africa, when I talk about ACH, I say, what exactly is that? So I think that is one big, even more exacerbated trend in Africa. I think the second one is infrastructure enablement has and remains a challenge, but has made a big development. And you know better than me, there's no blockchain, there's none of those things if I can't get access to electricity, if I can't get access to digital enablement. You have more than half of the population that is youth. They were born with mobile phones in their hands. Whether it's feature phones, smartphone, the rate of smartphone is increasing, all of the different things. You really are not at a place where you have to design solutions thinking, oh, how will my POS machine work? How will my processing capability, switch all of this needs to be back end. Nobody cares. Nobody wants to know. Much more so than in the West, much more so than on the global scene. Here it's about, okay, I need to get access to credit. I need to get savings accounts sorted in a population, in a place that doesn't understand the concept of how do you do wealth management and wealth innovation. I think all of those are shaping very uniquely the way some of the markets are evolving.
Okay, one trend I didn't mention, and I think I should have, is around the role the central banks or the regulators are playing, right? So here's a working hypothesis. In a number of emerging markets, central banks are becoming market makers, right? They're going beyond just people who govern policy, right? Africa, my working assumption is very heterogeneous, right? Because every country is slightly unique. Yes, there is some level of homogeneity which might exist. How have you, from a fintech perspective, where do you see central banks playing a role? Are they supportive? Are they actually stifling growth? Are they somewhere in the middle? I know the safe answer is, but it varies. But, if you were to not take a broad brush approach, but maybe pick a few countries specifically to bring to life, what's your view? Are they really driving this financial digital enablement, financial inclusion in true actions, or just lots and lots of words? And I'm sorry to put you on the spot with this.
No, I would say the intent is there. I think policies, especially recently, so digital banking license in Egypt, the rumors of a new EKYC policy coming across Egypt, which we've been hearing about for years, but apparently imminent now, all great sign. Nigeria is certainly very, very progressive. That the central bank governor is, the newly appointed central bank governor is doing great in terms of fostering this. You mentioned Kigali. I think Rwanda is an example, basket case of fantastic, support for the fintech and innovation ecosystem. Tanzania and Ethiopia are opening up massively to that opportunity, primarily supported by the regulator and by the government around how do we digitize. And listen, Kenya is the perfect example. M-Pesa would never have existed if it wasn't for all of the conducive regulation and end of view. So by and large, I would say, yes, they are supportive and they're definitely market makers. I will caveat that a little bit because nothing is ever as pretty as there's a lot of knee-jerk reaction and inconsistency movement that you'll see creeping that are sometimes driven by broader political and geopolitical agendas. And I think that is unfortunate, but it is the reality of the market we operate in. It is also a factor of the diversity of the economies and the intra-relationship that they have. Initiatives like the Africa Free Trade are fantastic movement in the right side. So I can only be hopeful about what the future is, but definitely market makers, definitely thinking about how do we help digitize, because they have a very simple problem to solve. They have a youthful population that has more and more a need for phones and access to view. They have a digital infrastructure that needs to be scaled up, and digitization of cash that needs to happen. Financial inclusion is a key driver for any GDP growth that they want to drive. So they can only be supportive. Now, how it translates, at what pace it goes is always been the question.
Yeah, I think, yes, I agree. But there is obviously a big question around capital, right? And capital deployment and availability of capital and smart capital, not just, capital. And that's always been a challenge. I think one of the things that we've seen, or at least I experienced last year in some of the sidelines of the conversation at the Inclusive FinTech Forum was, why isn't there more African capital being deployed into African startups? Because you need more of that for the international guys to sort of come in and put their money. Because, it's a little bit like, why aren't you deploying money in your backyard? Why are you asking us to fly across from around the world? I don't know if that is shifting. And I think that question is actually an interesting way to switch gears. So not switch gears, or maybe sort of switch the conversation. Let's talk a little bit about private equity, right? So if I just ask you two sort of bold questions, right? What are sort of the prevailing trends for private equity? And you can take fintech or wider, as a matter of fact, just take the wider sector if that paints a better picture, right? And then, what is the current state of private equity? So are there loads and loads of Helioses, right, who have followed you guys in the last 20 years, and therefore there's a nice sort of, bubbling scene where there's lots of, practitioners like you guys out there investing, right? And again, are there certain uniqueness or certain nuances, as you said, about the African private equity scene compared to other emerging markets? I wouldn't compare it to the developed market, emerging markets. So
you really love the broad
well, I think it's a learning curve for a lot of us, I guess, a lot of my audience, because we tend to be very, very specific on the Middle East. And yes, we cover Egypt very well, because I think there is a lot of synergies between, Arab Africa and the Middle East. We do dwell into India. I think you're the second or third person over the 75 episodes who's come in who's sort of deeply entrenched in the African scene. So yes, I am using a slightly broad brush approach.
I think to answer your very first question around private equity in general, I think private equity has had a rough time over the past couple of years for one main reason: cost of capital.
Yep.
Right. Interest rate rose by 526 bips in a very, very short amount of time. Yep. The return expectation, the access to fundraising, all of this has massive, massive implication across the value chain of deploying and investing capital itself, to the point that even on exits. I think I was reading, Bain published a report very, very recently that was picked up by the FT as well. There's an excess of $3 trillion worth of assets held in private equity that needs to be exited that are struggling to do so. Or maybe not struggling is the wrong word, that are being paused or delayed an exit because of the return consideration, because the assumptions taken at the moment of purchase or investment of those views wasn't there. So I think that's one predominant trend. The second one is, I think the value creation element is changing on a global scale and how it translates in private equity. I don't want to be too prescriptive, but essentially, and I know you're talking about emerging market, but essentially, by and large, the value creation view of a private equity was bucketed into two or three. One is, I take an asset, I turn it around, cost efficiencies, remove, scrap, etc. And then because of me doing that, I'll resell it for a nice return. The second one was a consolidation play. I buy an asset, I identify that there's something interesting, I'll do subsequent M&A transactions, consolidate the whole thing, and the sum of parts is greater than the view, and I get the return there. The third one was I gear up. I add leverage to the assets, and by adding that leverage, I get my economics to work in a different way, and I get the view. I think those three are going to struggle to be the most dominant path of value creation going forward, Western or emerging market world.
So what's the answer then?
Actual value creation, actually focusing on building and growing businesses, what I would say the right way, organically. Are we investing in the right businesses? Do they have substance behind them? Can we help guide, because of the international broad experience that private equity brings to the table, things around the right people, the right structure, the right strategy, without stifling the founder spirit and stifling the founder.
But then, Elias, it begs the question, right? Are you guys A, patient enough? B, are you willing to take, sub 25% year-on-year growth? And then to further compound the challenges in Africa, let's be honest, operating in Africa at the best of times is fairly hard for, again, a whole lot of reasons, half of them I would rather not mention. How does that all play out then?
I think patient enough, we have to be. And I think that especially in African private equity, you have to be. Right. It's not European private equity where the exit is going to come at year 4 and this is where you go and you reach out to 20 advisors and they'll have 6 buyers lined up by the end of the week. It's one where you really need to demonstrate. I talked about macro before, by the way. To your point about 25%, are we talking local currency growth in value or USD growth in value?
Well, that's
a
compounded issue.
Absolutely. So all of the things, the patience, we have to be. We have historically been, there's assets we've held and there's been partial liquidity along the way. We've brought strategic investors along the way that we believe help to that realization of the growth story. But there's assets we've held with far longer than the average tenure. And our LPs, the investors that put money in, understand that, right, in an African context. So that, I think, is one reality and truth. I think the second one around the growth of the 25% or the compounding view, truth is I think it's absolutely achievable because you have a captive audience that is hungry for those services. You have no shortage of talent. You have deep enough markets, if you're talking about at least the large economies, that you're able to really scale. There's no limiter from a market perspective to achieving that growth. So it's up to identifying the right business, making sure that you're taking the right calls at the right time, which is always easier to say than done. But it's definitely there. And it's a much more hands-on approach to growth than it is just sitting on a board and saying, give me the report.
And that's again, right? So how is that impacting the operating models of the private equity organizations? With all due respect, right? And this is not talking about you because I've known you long enough, right? The vast majority of the professionals that I come across from the private equity world are excellent technicians, right? They're great at deal structuring, deal execution, prophesizing about strategies on pieces of paper. Well, I don't know why I was looking at the right. I thought there was a board there. But very few actually have what I call real world experience who could sit on what I call a proactive board and tell a founder or inform the founder on his decision making. So are you seeing a seismic shift happening in the private equity scene that I'm not?
So I will talk about private equity in Africa and emerging markets.
100%. Let's talk. Yes.
And I will say yes.
Okay.
And I will say I'm a living example. I'm not the only one, but I'm a living example of that.
Okay.
You've known me for what, 15? You said 10 plus years. I think it's more 15.
Is it 15? Well, I just don't want to say how old I am, man.
That's all right.
Right.
And you know that I don't come from an investment background.
Yep.
I'm not an investment banker. I don't have the technician know-how that you so claim. It's a fascinating world. For me, I've dabbled a little bit. I've done a few M&A transactions, but nothing of that scale and magnitude that you refer to. What I've done with various degrees of success is build scaled businesses, teams, departments, products, etc. And Helios took a punt on hiring a guy like me that doesn't necessarily fit within that view, as a recognition of exactly what you said. Said we can draw and we can tell you in paper how it goes, but we can't. Now that's, I think, testimony to Helios, but also an answer to your question, which is the recognition that we need to think differently about the problems to be able to solve for them. Helios specifically, it's not a new thing for Helios. Helios specifically has, is, I think from recollection, the only private equity at scale that has an operating arm in-house that is all about value creation and moving on things. So again, and all of those individuals are practitioners. They used to work in big corporates and companies, startups, etc. So they've seen the other side. So when they talk to a CEO or CFO, when we're looking at the things, there's that credibility and that pragmatism that comes with some of the view. I think the African private equity space tends to be also a lot more involved and hands-on, but also the founders that are asking for that capital tend to not ask for the capital just because of the financial, ticket or view, right? Because the good businesses, to be honest, they'll always find money somewhere. It might not be the right conditions, it might not be the thing, but I think we, Helios, we don't take an investment if we don't think we have a strategic value to add, no matter the return potential on paper, because we know, I say TSA, this is Africa, right? There's always something that you can't plan, you can't predict end of view. So I don't know if that answers your question, but definitely a shift in focus in the way we approach.
Well, that's very promising to hear. And I guess it's just where I sit on the curve. And I think my perspective is I'm yet to see that in scale, right?
100%.
But that could be my exposure, right? It couldn't.
I'm talking about African private equity. There's not that many large private equities operating in Africa. You were talking earlier about African money going to Africa. There's a lot of funds. There's a lot of family offices, but they tend to gravitate between your 50 to 150 million. Some will go to 200. Those there's loads of, right? But when you have a fund of that size, the approach, the number of deployment, the scale, the reach that you have is going to be very different to what a Helios will do with billions under management.
Okay. So that begs the question. What do you, as Helios, see as the next phase of sort of Africa's, if I may say, entrepreneurial ecosystem? Where do you see? Because there's growth across the spectrum. As you said, the baseline is low, the need for digitization is high, right? How do you guys see this play out, the entrepreneurship scene play out? What are the pockets that you see going into sort of supercharge growth over the next 2 to 3 years or 4 years?
I think one big pocket, and it's going to not surprise you, but it's outside of the fintech, is on digital infra. Mm-hmm. Data centers, hyperscalers trying to expand across the region. There's more and more demand for establishing kind of more and more racks and capacity across the continent, and we think that is poised to boom because it is a huge space, right? So land is not an issue. Once you sorted the energy and all the rest, it becomes, and I think that is waiting to be disrupted and will be massive. And with all the international geopolitical conflicts, I think there's a lot of things that are moving to that region. So that's definitely one. In the fintech and financial services space, I think one of the big push that I think is everything around SME enablement. Mm-hmm. SME enablement, whether it's, your favorite topic, BNPL and a version of BNPL. Yeah. I don't think it's going to be BNPL in the claw or even the tabby way, but it's a BNPL access to consumer and digitization. The same way you've had mobile wallets and telcos driving, digitization, financial inclusion of the B2C space to a large extent. Is close to half the population of Africa that has a mobile money instrument. How did it happen on the SME space? So I think that's the second one. What it does for entrepreneurship, it means that I think, what was it last year? There was upward of 5,000 new fintech that got created. Now, the majority of those will not survive, as is the case. But it just shows that there is latent demand, latent talent, and latent willingness to hustle. You have to understand something. The African culture is a culture of hustling. You are hungry to go and do more. It's not like you will find, a job at AXA, as you know, or a consulting firm. There's not that many that are there that will say, here's top dollars, I will pay you. They are, but for the scale and the size of the population, every person you will speak to will say, I have a side gig, I have a side hustle. That entrepreneurship DNA is very much there, and I think those two opportunities kind of help galvanize it from my perspective.
Let me give you the flip side. What are some of the biggest challenges that you see that Africa faces in terms of activating this entrepreneurial scene?
We've covered a lot of them already. So
we haven't covered the real interesting ones, though.
What are the interesting ones?
No, I'm asking you. You're the expert in the market.
So I think the big challenges: macro and access to capital.
Right.
That's definitely top line.
Yep.
We've covered that. Regulation.
We've covered that.
Talent drain. People being poached for better salaries in Dubai and some of the things.
And that is true. So you are seeing talent drain out of Africa.
Absolutely. Okay. In some of the economies. When you have somebody who's been living in a country where the inflation is high double digit itself, devaluation of the currency massively, you've got to rethink, why am I not going somewhere else to do this? Now there's a large enough population, youthful, skilled enough population is there. I think the other one is
so I've got political instability for you, right? That still stays prevalent, right? I don't know. I personally think there is a certain amount of multipolarization, right? Because let's be honest, Africa is not a unified bloc, right? As much as they're trying to do free trade agreements and so on and so 100%. Forth, they're a little bit of a microcosm of what's happening globally, right? We're becoming multipolar. Let's be honest, ease to do business specifically with government isn't there, right? Whether that's corruption, whether that's political agenda, so on and so forth. How are these things manifesting? Are they actually getting worse? Are they getting better? Or are people just getting better at navigating them?
The last part. I think people are getting better. I cannot say they're getting worse or they're getting better from that specific angle, because I think you've just fallen into the trap, if I may say so myself, of painting Africa with one single brush.
I agree with you.
And I think if you go in specific markets, you're going to see a lot of political stability. Now, you could question whether the regime in power that bringing the stability is the right regime. That's a different
Doesn't matter, but it's still
political stability is there. I think some of the large economies that we talked about are deep enough that the intra-Africa collaboration doesn't hinder entrepreneurship innovation itself. So I don't think it's yet to reach the inhibitor. I'll go back to one of the first questions around the Pan-African angle. That's a challenge for that. So companies to reach scale on a Pan-African level, I fully agree with you that it's going to be a massive, massive issue. Mm-hmm. But if you're talking about pure innovation, entrepreneurship, startup ecosystem development, not at all. Nigeria has I think there's been, I'll have to recall. I'll give you three stats. There's 200 and something hubs, digital hubs that have been created in the past year, mm-hmm. in across the African continent. That's huge. It's massive, right? You're upward 1,000. That's net, right? With the ones that closed, with the ones that reopen, all the things. You have, I don't know if you know that, but South Africa is the country that spends the most time online on a global scale.
Okay.
On average of 11 hours a day per person.
Okay.
Online.
They're lonely people, but that's all right.
Nigeria is the third country in terms of social media consumption. And the use cases here are social commerce on top of, your Instagram posting and I don't know what. So all of those things are, for me, signs that what you describe is not a blocker, that people have
holding back. It's not holding
people
back.
Have learned how to navigate the system, and you just have to accept some realities of doing business in some of those markets, which means everything is going to be tougher.
And that's pretty much the sense I get, right? My exposure isn't that great. The few travels that I have done, I figured out that people have sort of reconciled to what exists. Yeah. The logic is that these things will improve over a period of time. There is no magic bullet. Yeah. But I think, as you said, the opportunity is big enough. And I think the versatility or the entrepreneurial instinct is great enough for people to kind of navigate. Last two questions, Elias, purely Helios specific, right? One is, there's a lot going on in terms of the world of investment, which is around sustainability, right? Which is around social good. Right, which is around social upliftment,
ESG,
women empowerment, so on and so forth, right? All of those are incredibly relevant for Africa as a nation, right? Because let's be honest, Africa is a very large constituent part of the population. It's a very large constituent part of the landmass, so on and so forth. How are these trends impacting? And I know you mentioned the fact that you created 4 million plus jobs and so on and so forth, right? How are these things impacting the way you guys invest in companies in Africa or beyond?
So I won't go through the obvious answer of ESG is a key requirement. Yeah. The LP community is extremely sensitive to this. So it is in our interest to focus on that. But Arjun, at the start, the whole ethos of why Helios was created was social impact investing.
Yep.
We're not a social impact investment fund. That's not but that was the ethos. So the sector focus, where we deploy capital, have an angle of, is it going to help enable economic growth of the market? Both because we think that's a great way to ensure that, that return is there, but also because we think, can we help deploy US dollars into those markets that will help foster that view? We'll look at companies and entrepreneurs that have African DNA for Africa, right? We tend to not back because they have access to other pools of capital, entrepreneurs are not of the same descent, not because of any discrimination,
That's
if there's African, but it's part of the philosophy itself. So it translates in so many different ways on a day-to-day basis. Even our own, investment team and employees are predominantly, I think 90+% are from African origins themselves. There's a real passion to say, I'm not just here to make return, I'm here to make a difference by deploying capital itself. And just to go back to the previous question, the big challenge, because we now established that those political instabilities are not, the big challenge is access to capital, not because people don't want to tap into the opportunities, because when it comes to getting the money out, when you want to get your return, there's a lot of challenges. So why would you put it into the country if you don't know how to put it out? And therefore, local family offices don't have that. All of this kind of starts playing a role.
But Elias, that begs this question, right? Things which you've just mentioned, social impact, women empowerment, so on and so forth, unfortunately are not as correlated to high growth, right? Returns. I had a similar debate during COP28 with a climate impact fund. And they talked about, how they were actually investing in companies which were actually driving great climate impact. But when I actually questioned them saying, and what if you don't get the returns that you expect to, do you walk away from them? And the answer was yes, right? So how do you balance this? How do you balance the fact that you've got to deliver a certain amount of return, highly capitalistic in its essence, to, upliftment? Again, it comes back to how do you strike a balance then?
I think that's a great question. I'll answer very simply. We're not an impact fund. There are impact funds that are focused on delivering returns purely measured about social impact that they do. Carry structure, now I'm getting into the private equity details, that are paid based on impact results, right? And there are funds that do that. We're not that. We're a typical private equity return focused fund. Now what we do is when we choose to invest into the businesses, we have that lens of social impact and social good in the selection process of it. And as I said before, we are a very patient investor. So if the returns are not coming as quickly as the Excel said, for lack of better
Excel said.
It is at the end of the day, you talk
now
then how do we come back and make sure that we're helping, fostering, growing? How can we be we don't give up on businesses just to say because it's something else, also because private equity invest in more mature businesses that are attractive, that ticks all the boxes, are plenty, but they're not the majority, as you said, the startup scene, the less mature. So it's both a balance of we need to, and it's in our DNA to do so.
Okay, interesting. So last question, Elias, what's next for Helios and specifically for Helios in fintech? I mentioned you talked about the 4 sectors, right? But if you sort of break that down to the next level, so what's on the horizon for the next sort of 12 to 18 months?
You're asking a question I can't answer, Arjun.
Well, you don't have to tell me the name of the assets, but what are you looking at currently?
So looking at consumer finance players, so about the whole SME financing, some of the names you know. I'm sure you can guess some of them. Banking as a service, infrastructure as a service. I'm hoping that we'll be able to announce very, very shortly some positive news. Let's see if that
and you're dragging these companies into Africa, or are these all in Africa who you want to help them sort of expand in Africa?
It's a mix of 3 things. Okay. Some that are in Africa that need to scale intra-country, intra-Africa. There's 2 in the pipeline that I'm working on specifically. There's one that is coming outside of Africa that already had burgeoning business in Africa, but is looking to scale that massively. We're working together because we think the partnership is strategic to help them succeed across the continent. So that's the second one. And I think that's a growing trend. I think there's more and more businesses, to your point, are looking at this and looking at shops like ours to say, we don't understand this continent. We don't know how to operate. Can you help us? And is there a return that can be done? And the third one is because, and those are predominantly North African, there are those fintechs that are looking to say, well, can I come to Saudi? Because that's great. It's dollarized revenue. It's all of the things. Can you help us across, and can we do the thing? So I guess the 3, if I were to assign a weight and a focus, I think just because of historical reason, the African-born, African focus is the vast majority still. The rest of the 2 are
More opportunistic, I guess.
I get they're evolving towards proactive search, but more opportunistic in there's not that many that will fit the private equity mandate. We're not a VC again, right? It's not about putting a small ticket check and moving across.
But I hopefully that will change, right? Because the size of Africa, and especially the 4 or 5 big economies, which constitute about 60% of the country's GDP, I think should be tremendous. As long as these international firms know how to operate in Africa, which is, I think, the biggest question mark. And I think you guys play a great role as, people who provide that soft landing. If there is a soft landing ever in Africa, I think it will. But I do think that will be very interesting and very important to infuse that sort of foreign or international flavor into the local context, because it will galvanize a whole new trend within the African nations to sort of move ahead. In any case, I'm sure we will talk again. I'm sure we'll have many more conversations, and we're going to watch very carefully what happens with Helios now that you're on my radar. Thank you for coming in.
It was a pleasure.
Have a good flight back to cold,
2 hours
to cold London. Yeah, no, I'll let you get out and get to the airport. So everybody, that was Elias Yazbeck. Elias is managing director and head of financial services and fintech for Helios Investment Partners. Helios, Elias, right? I've got to make sure I don't get the names wrong. Thank you for joining in, and I'll see you guys next week.